Hey guys, welcome back to our weekly crypto wrap up. As you see, we're a little bit later than our normal time. Had a bit of a long day today, but we're back. Happy October. We've had some interesting things happen in September. We got that September effect that we tend to get every year with a risk on assets, meaning that we tend to see some bearish activity, and we did receive that. As well, we want to take a look at how the non-farming payroll jobs report has affected the market coming into this week and what we can really expect. So, guys, as we do every week, we take a look at Bitcoin dominance to give us some overall bias of what to expect with the crypto market and how much of Bitcoin's price action is going to give us the movement that we're looking for. So as you see here, guys, what we've mentioned here in the last few weeks, we talked about these levels here and this very big support level that has acted as support for a very long time. When we were first doing our YouTube videos, we were expecting this leg lower, which we did receive. We established a low and automatically we reversed with a bullish engulfing pattern. And since then, we've attempted to go back and retest areas of resistance from previously broken areas of support. So this is what we were able to accomplish from there. And we said that we were expecting this move up to retest this area here. And as you see right now, we're pretty much kind of consolidating after we've had a lot of activity, for the month of October. What is it that we can get for some follow through price action? We know that, when we tend to have a lot of small candlesticks, meaning that we're not getting a lot of price action, price is either accumulating or going to do some distribution, that eventually you're going to get a break, either break higher, break lower. And so what we're going to do is jump down to the weekly chart, which is usually where we start. And I want us to take a look. So we have this arrow here from the previous weeks. And when we look at where price is, that is a great area of retest, given that we have been in a downtrend overall, because Bitcoin dominance is losing market share to altcoins. And that's something that we've been expecting now for a handful of years. However, looking at this area of support that we retested by us pulling out our fib tool, we can look and see that that was pretty much ideal what we got. We got that retest into the 23.6% of our fib extension before we retest it and pull back. And so currently right now we want to see if we're going to come down lower from this level, or are we going to potentially get, for example, one more push higher before we ultimately come down. And it's not to say that that's going to happen this week. And so whenever you are in between areas of support and resistance, you want to allow price action to play itself out, meaning you want to see if you're going to get bearish continuation where prices drift lower, or are you going to stabilize at these levels and attempt to make one push higher? And that's pretty much our play that we're anticipating, which is we're going to either get a push lower or a push higher. And that's based on how we tend to hold this area of support. And so this is one outlook of it. Once we jump into the S&P 500 as well as the DXY, that's going to also give us some more indication as far as directional biases for what we could expect if we're going to get an inverse correlation to how the market is going to move. But guys, that is Bitcoin dominance. This is the scenario that we want to play out, which is it's either going to hold support at the area that it is currently right now, which is at the 41.16% level. And so we may drift lower and or we go and retest the 38.2% fib retracement to make another lower high. So let's see how this plays out. And so now we're going to jump over into the altcoin index. And guys, as you know, every time we go over this every week, and the altcoin index is a key measurement for the allocation of altcoins in comparison to Bitcoin. So it would be our inverse essentially to Bitcoin dominance. And as you see here, we kind of had some arrows here to play out how price actually could possibly move. And, pretty much for the most part, it played out in that fashion. However, much like Bitcoin dominance and the alts, we've just been consolidating. We have been just accumulating in these areas. If we tend to, drop lower than where we currently were, we're not making a sharp movement in price, but really just, in a tight range, which we have been in now for about 2 months or so, going on 2 months. And so what we want to do is just, once again, allow price to react, meaning we know that we have a lower high here at 1962, and we have our low, at 1764. So we're in between a support and resistance levels, which is usually a really hard way to look at how price action would perform. However, if we're understanding that Bitcoin dominance has broken above its support levels and it's currently sitting at support, and we're in awareness that with the altcoin index, if it acts inversely, then we might drift lower. However, we are in a situation now where if we don't get much of any price action with Bitcoin dominance, then it is an expectation that the same way we saw with Bitcoin dominance, that we can get the same type of play with the altcoin index, which is we're sitting in between an area, meaning we know where our support is and we know where resistance is. And we're going to get a break sooner or later, either to the downside or the upside. If we're getting a break to the upside, I'm going to be looking at this local high and see how price reacts there. As well as if we don't get a break to the upside, we know where our local low is. And so you just want to allow price to play out. See what happens this week. Be prepared that, one or the other could happen, and just allow it to happen and wait for follow through price action. Meaning if we compromise a support level, we expect to retest before prices fall lower. If we break higher and we go to a local area of resistance, then we expect price to continue higher or at least retest. So guys, we're in a range. Allow price to play itself out, and then you make a move. So that is our altcoin index. And so now we're going to jump into Bitcoin itself. And it's been quite interesting with Bitcoin, ever since we've made this low of about 17.6, 17.5 way back in June. We have not had any lower attempts to retest this support. We've gotten close twice, and we've just been consolidating from there. And we know that when price tends to consolidate in an area long enough, that we expect an explosion in price rather to the upside or downside. So what has happened is we had this ascending wedge pattern, meaning we broke this level of support that was right here. And what you tend to see happen is price go back to retest in those areas, and you continue lower. And so what we've had is this lower leg come close to retesting this bottom on multiple occasions, and yet we've rejected going lower. So what does that mean? It's probably not time for price to go there. And as you see here, we have some arrows here from our previous video showing us what we were expecting as far as follow through price action. So we had got that dip, and currently right now we're attempting to run higher. And so what could possibly lead us in this direction, which is we see the dollar index give us bearish price action. Is it to say that we are bottomed out and completely turned around? I wouldn't count that in until we're able to make a new high, and we haven't been able to do so now, since August 15th. So pay attention, because we are in a very, very tight range that we expect some explosion in price with Bitcoin. And so if I was to look at it, if we're going to get a run up, I'll retest this lower high level around 21.5 and expect to see where price reacts once we get to that level, if we get that push higher, as well as if we decide to dump. We know that ultimately the lower end of price is around the 17.6 level. So we're ranging in between these prices, which is really a lot. But once again, like I just mentioned with the altcoin index and Bitcoin dominance, which is if we are having consolidation, we're sitting at support, then what it could potentially mean is that if we do get this run up, the run up on Bitcoin might be a little bit more aggressive than the alts. However, that also keeps in mind the fact that if the altcoin index gives us bullish price action, then we can expect the altcoins to outperform Bitcoin for this week. So just wait to see what type of impulse reaction we get at price with these levels, given that ultimately we still want to get down to this 13K. It's not going to say that's going to happen tomorrow or next week, or even this month. But, it's something that we are eyeing for a target for potential bottom in the future. But we can only wait to see what's going to happen at that point. Giving, for example, we recently been notified that Mt. Gox is going to start to release the Bitcoin back to the individuals who had it compromised from them in January. So that means that we can possibly dance for the remainder of the year, and we can see this in January. That's crazy to think about, but is it potentially possible? Yes. So that is Bitcoin. Now, when we jump into Ethereum, looks a little bit more interesting. So much like the altcoin index chart, this is essentially that what we've been getting, which is, we had, a potential pattern here play out with Ethereum, which is we had our head and shoulders pattern. We had a head painted up there, a shoulder here, as well as a shoulder here to the left. So this is what I mentioned. You guys may hear me talk about this quite often, is when you have patterns, price action that continues to play out over and over again, you pay attention to those because they're giving you some indicators for what could potentially happen with price. And so we've had this play out. However, we didn't really compromise the neckline. We made a low, but we are still consolidating here. And so we're, don't have a lot of room left to go before a decision is made. And giving the retracement levels that we're looking at here for where price has stalled out, right around the 70% level, which is about normal, and a bounce at the 78.6. So is it to say that, we might come back up to 1408 if we see Bitcoin pops? Possible. However, we've made multiple rejections here. So I'm counting more of I'm counting more of price to come down even further. Given that if we pay attention to what we've learned about patterns here in the last few minutes, this is another ascending wedge pattern. And what have we learned about ascending wedge patterns? Is that they tend to happen after you've had a rejection from resistance, a fall to support, breaking a previous level of support. You get a retest to that area of support, and then you get follow through bearish price action. So this ultimately, I would love to see this happen. Is it going to happen now? We'll have to wait and see. Do we get one more run up beforehand? That's very possible too as well. Given that we're in this range and we have been in this range now for a couple weeks, allow price to play out. Okay. So keep that in mind when we're looking at that, as well as in, you know, where we need to retest, which is the bottom 950 that we have yet to retest. So keep those things in mind. And we know that if we get any potential news on crypto and it's bearish, that we will essentially capitulate, meaning we're going to flush out and bearish price action will continue. So keep that in mind. This is the pattern that we're in right now, and it's playing out. And we know how these patterns play out, which is to the downside. With that expectation in mind, make sure that if you're trading or if you're investing, that you are strategically protecting your account once this pattern plays out. Okay, guys, so that is Ethereum. We might get one more wick up, and or we finally get the breakdown of this ascending wedge pattern. We drop lower. Okay, guys, so now we're going to jump in to the S&P 500. And if you've missed last week's video and you're wondering why we look at the S&P 500, is because it has correlated once it, as of I believe 2020, broke trend away from gold and silver. It became more correlated with the stock market and S&P 500 in particular. And what we happened to see with S&P 500, we made a new low in the previous week before we opened a new month, and we saw a relief rally, which is what we expressed last week. We saw a relief rally for the S&P, which was to go back and retest previously broken support, which is now resistance, which is what we got. And what essentially happened was we got, I just want to apologize for the background noise once again. Hey, it just happens. So anyway, back to what we were saying about the S&P 500. So what did we get? We got this low created, and automatically we followed up with a bearish engulfing pattern. And what happened? We went to retest the local resistance prior to the news that came out on Friday, which followed through with bearish price action, which was pretty much expected. And what is that to say? That is to say that if we are in the understanding or the awareness that crypto follows the S&P 500, and we are still displaying bearish activity. So like, for example, right now, we are right back at that area that was our lower low. And as you see here, as mentioned, it made a low. However, right now, currently is attempting to retrace some of the price action that we had on Friday. So if we drop down to a lower time frame here on a 4-hour chart, you see that we retested these areas here. Is it to say that, we might pull back and experience a relief rally before we get continued bearish price action? Absolutely. Am I expecting a full turnaround? Not really. And I say that because the dollar index is still printing bullish price action. So we want to wait to see, how is this going to play out this week, given that we've rejected this high and we've came back into these lows. Are we going to get a little something like this and then actually come back down and retest this low? Absolutely possible. Okay. And so now what does that look like? So if we take out our fun tool, the fib, and we had this run up, or actually here, we'll flip it this way. So we had our high, and currently is it possible that we just retrace a little bit? I'm not expecting a lot because this was a pretty big, massive move. So maybe some consolidation here in this area between 3,600, not even 3,700. So between the 3,600 levels, can we expect some retracement before we dump lower? Absolutely. Knowing that our low is at 35.92, that will give us an indication once we get this turnaround. And as of right now, it's showing that we're getting this turnaround, that we can then expect some bearish price action with crypto. Yes. Is it going to be, move for move? Not necessarily. And the reason why I say that is because it was very interesting, given that in the month of September, when we experienced our September effect, that although there was massively bearish price action on the stock market and stock market indexes, including foreign currencies, that we basically consolidated for the month of September. We still were unable to make new lows in comparison. For example, with the S&P 500, we actually made a new low. Vice versa, the same thing happened with both gold and silver. We didn't see new lows being printed. So that's going to continue to be something that we pay attention to here coming into, Q4 for the year, and how that can affect alternative investments. So I want to keep an eye on price action for the S&P 500. Like I said, we see here that it's starting to pull lower, and how it may be in a direct effect with crypto. So as you see right now, Bitcoin is actually starting to pull down. And that's really, indicative to, are we going to actually finally retest this level? We'll wait and see how price reacts here for this week. So guys, that is the S&P 500 that we were looking at. We're expecting continued bearish price action for this week. And so now the most important chart of it all, which is the dollar index. So what happened for the dollar index last week? So as you see here, we have been, making, consistently new highs. And what made last week a little bit different was we actually begun the week bearish, and we pulled back down to an area of support. However, we created another higher low. So what does that mean? We did not compromise the previous low. And instead, we bounced from support and we're trending back higher. So what that can give us some insight to is that we are looking to go back and ultimately retest 114. So now, is that going to happen this week? Very possible. Given that the dollar is moving very, very strongly, especially after the jobs report that we received last Friday. So we want to see if we're going to retest this. Any rejection that we get, we've dumped lower. However, given that we've made a higher low, and we know that we ultimately want to retest, we can only allow this to happen before we consider looking at climbing higher. And so I've mentioned in previous videos, I'm expecting price for the dollar index to really retest 120. And as you can see why. The 120 level is an area that hasn't been retested in, a very long time. However, given that we have this massively bullish price action, that I would not cancel this idea out. And if we do get this push, we expect lower prices with crypto, with the stock market, with altcoins itself. And like I said, it's not going to be something that we're going to get tomorrow, but something that's going to play out, given this is a weekly chart. Doesn't mean that we can have a really cold winter when it comes to price action for risk on assets. Absolutely. So these are just some things to look ahead for and to kind of sum up everything as a reminder to you guys. The dollar has been crushing everything. Foreign currencies, the stock market, crypto, gold and silver. And because of that, we've seen every form of inflation hedge, or as told to us as inflation hedge, not be able to do exactly what we've been told that they've been are supposed to do. And for that reason, we're in a very unsettling economic environment. No, I'm not flooding at all, but you have to be very strategic about your moves that you're going to be making, given that we're investing for the long term in things like the stock market and crypto. You want to be as strategic as possible to get the best value for your investment. And if we're in a macro environment that we're in now, investing may be a little difficult. So look at your plan, be strategic, understanding that if the dollar is bullish, the things we may want to invest in might necessarily continue with bearish price action, meaning the prices are going to continue to fall, which in the future may provide us wonderful investing opportunities. So, guys, that is what we're looking at. We got continued bullish price action on the dollar with expected bearish price action with crypto, the stock market, and just about everything else. The only thing that will decipher that for sure is if we retest the high for the dollar at 114 and we fail, then we may see another relief rally with crypto. So, guys, that is it. Once again, I apologize for the background noise. I hope you all have a wonderful day, a wonderful week. Happy trading and happy investing.